Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 29th of April. Starting off with the FTSE 100, where the more that the gloom and doom merchants and the financial media hit us, the higher the market goes. You would almost think that they wanted the market to go down rather than up. But the initial target here, the top of that rising December trend channel, 83.30, close now, probably a day or two away if we're lucky. And upside valid while we hold above that initial April peak, 80.44. If you're a fan of the UK stock market and blue chips, then you would be looking for 82.30 to break, and for this market to head up to as high as 8,500 by the end of next month. I was going for June before, end of June, but the market seems to be rather faster in terms of the upside at the moment. Maybe we need more negative comments, but 8,500 derived not only for the upper parallel of that December rising trend channel, but also the top of that rising 2007 trend channel, which obviously fits most of the price action on the FTSE over the last 17, 18 years very well indeed. In terms of the downside, if we do go back below 80.44, then the worst at the moment is seen as being 78.80, which was that initial April support. Uptrend line in the RSI window as you'd expect, and RSI, although it's overbought, not horrifically so at the moment. Moving on to the DAX, which maybe will start following the FTSE to the upside. Obviously, this went to record levels quite some time ago. Above the 50-day line here, 17,800. We're looking for a retest of 18,500 by the end of next month. Rather simple there. And a bounce off RSI 50 as well, RSI at 56, so it does look as though this market will be able to break the current resistance zone just near the 18,300 level. Moving on to the Dow, and here still grappling with the floor of that rising trend channel from October. The level there around 38,000, so the longer we stay above that, the more comfortable we feel. RSI still below neutral 50, so that does suggest some work here to do, and if we stay above 38,000, the initial target here, 38,800 at the 50-day moving average. Moving on to Bitcoin, which is looking slightly sorry for itself at the moment. Obviously, the excitement of the halving and everything else factored in. We've broken down below the floor of that rising trend channel from October. The view now is that there's the risk of a test of the a support line projection from back in February. That's heading towards 58,000, and we could see that over the next week or two while we remain below the 50-day line. That's currently at 67,000. Worst case is that we can't even get back above 65,000 and head directly to the 58,000 area. We've already had our RSI 50 failure, so that happened last week, and that's worked as a leading indicator on the downside. Moving on to gold, and here the market's still within that rising trend channel from back in February. Floor of the channel nominally around, we'll call it the 2310 level now, and above that we're still looking for a retest of 2440 plus by the end of next month. Moving on to the stocks, and quite a motley crew here today. First one is Amigo, which probably many of us thought, including myself, would be gone by now. But we didn't know this was Amigo. It would be a bear trap gap reversal here, and even a bounce off a rising 50-day moving average. So that does suggest that we could head back to 0.35 while we remain above that 50-day line. But obviously, the plug could be pulled on this situation at any time. So one has to be slightly cautious. Rising trend channel base as well is also positive, and you can see that the floor of the channel there at 0.16 and the top of the channel there at 0.5. But I think just between the 50 and 200-day lines is probably the way to assume things will go from now. On to Asiamet, which has had quite a lot of coverage here recently, and it's gone well. We've just missed the target there, 0.94 pence, which is the top of that rising December trend channel base. Be nice to see an end of day close today above the 200-day line at 0.9. We're just there now, and above 0.94 we've got the chance of 1.2 pence in the upper parallel of that rising trend channel by the end of next month. The main thing is, I suppose, to stay above the old initial 2024 peak at 0.83. On to a stock which I haven't looked at for quite some time. Enwell seems to have fallen through the different time frames, but here you can see that we have this U-shaped reversal, a decent one actually, with an unfilled gap to the upside at the beginning of this month, and basically above the initial 2024 peak around 17.5 pence, but looking for up to 28 or 29 pence, obviously retesting the resistance of last month, and I suppose the main charting resistance on that daily chart, but the key here holding above 17.5 pence. Next up is another falling knife situation, and here we've got the chart of Faron, and here the shares are pushed back above the old February support there, £1.25 above that. We're looking for up to £1.60 by the end of next month. We've got a gap to fill there around £1.45, so that might be the first comfortable target, and then £1.60, the top of that broadening triangle from back in February. Big win would be an end of day close above the 50-day moving average, £1.40. On to a stock from the Aquis market. Somebody has to look at it, obviously, now and again, and looks like it's me, Invinity, and here you can see a sideways shuffle above a rising 50-day moving average, one of our favorite setups. We'll see that, another example of that in a minute or two. We also gapped up through, it was also a bear trap gap reversal through the resistance line there from back in September, so a very bullish setup really on a technical basis. Initial target here 28 pence, which is the February resistance line, and after that as much as 34 pence by the end of next month, but the proviso is we need to stay above that 50-day line, so basically above 23, looking for 33, but you wouldn't want to let the shares slip down below that stop loss zone. On to Keras, which is another sort of a low percentage turnaround situation. Here we've got bullish divergence, bounced off the floor of that broadening triangle from back in December. The top of that triangle there up to 3 pence, which would obviously be a punchy target from current levels, but maybe you just want to look for 2.25 pence initially, which was resistance on the way down earlier this month. But the key here, I suppose, the bullish divergence suggesting that we are going to turn around in a meaningful way. Myriad is next, and here you can see this ongoing rising trend channel basically going for months. We had the bear trap gap reversal back in March, and that's worked. Also had a sideways shuffle above a rising 50-day line. In fact, now if you look closely, the 200-day line is also rising, which suggests that we're in a run-up to a golden cross. The golden cross run-up tends to be the strongest part of the cycle, so it should be the case that we get our target near 3 pence sometime during May, and maybe much more, given that we are in the run-up to that golden cross signal. Ideally, we stay on the right side of recent resistance around 1.9 pence. Moving on to the star of the day, I think, Mosman Oil Gas. I saw some bright sparks suggested that my 0.3031 target was potentially one that could be hit. Didn't look quite as likely yesterday or over the weekend, but now it looks as though we are within spitting distance of that. Rising trend channel base from September, 0.31 the target, while we're above the 200-day moving average at 0.19. Obviously, there's always the chance that the company might feel it might be time for a fundraise, but at the moment, just going by the technicals, looking pretty good there at the moment. Another star from yesterday's bulletin board heroes was and is Phoenix Copper, looking very good as of the end of last week, and heading quite quickly now to the initial target here. Well, sorry, the second target here. The initial target was 13.5. Second target, 19 pence at the 200-day moving average, and if we can break that, I would agree with somebody on Twitter, 23 would be the target after that, maybe sometime during May. Probably most of us looking at the stock know why the shares might be rising. Upside valid while we hold above the 15 pence level, which was resistance on the way down, and an end of day close back above 18 pence would be a real win, as that was support initially at the beginning of the year. On to Prospex, where we've been waiting months for the shares to finally turn around. Another potential turnaround situation. We've been here many times before, but we're breaking that line of resistance there from July, above 5.25, looking for 6.8 pence at the top of that broadening triangle from August. But as I said, we have been here many times before. Let's see if this time is different. What might be different is that if that 200-day line starts to turn up, that might suggest that we are finally looking at a meaningful and lasting turnaround in the stock. Speaking of lasting turnarounds, we've got Regtech next, where I see the bears are doing their best to sabotage and scare people out of the stock. But looking at the price action itself, we had a gap down. It was a bear trap island reversal, and then a gap up. We've had a gap fill rebound as well. So even if we are heading for a nightmare, the target here could be the top of that falling trend channel from the end of February at 4.1 pence. If you're cautious, maybe wait for an end of day close above the 50-day line at 3.2 pence. As we haven't been above that 50-day line for many months. I can't quite see how many months there are, but it hasn't been above that feature since the beginning of the year. Moving along to the last few. First one is a stock which I've never heard of, which is quite an achievement, given I look at the market every day. Strip tinning. Here we have responded to Friday's news finally and broken above the 50-day line at 37 pence. Above that, looking for as much as 58 pence by the end of next month at the top of that broadening triangle from back in September. This was a bear trap gap reversal, and we also had a failed gap fill earlier in the month, so that is doubly bullish in terms of a potential turnaround. On to Trellis, which I also try not to look at very much, but couldn't resist it today. Here we've got a falling wedge situation, and I like the higher RSI rebound. That's obviously micro technical analysis, but that might suggest that we're going to break the 50-day line there around 2.6 pence. Best case here, if this is the bottom, then we would head up to the 200-day line at 4.5 pence by the end of next month. But that is maybe a very early bird indication there. Moving on to URA Holdings, and here bounced off the floor of that rising red trend channel from November. Obviously, production in the air, and looking for the top of that channel at 2.9 pence by the end of next month. Hopefully, the emeralds will be flowing by that time, and ideally, we stay on the right side of recent support, 1.9 pence in the meantime. Finishing off with Zenova, which had a chunky contract announcement today. Here we've had a bear trap gap reversal from below the January support there at 2.15 pence, also from below the 50-day line at the same level. Ideally, we stay above, or we stay on the right side of 2 pence and head up to as high as 3.7 pence by the end of next month. Again, one would suggest that that would be fundraisers permitting. That's it for me today. More updates tomorrow.